Have you ever wondered how economic uncertainties and tariffs are impacting Canada's multifamily rental markets, especially after a notable jump in 2024? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. Let's get right to it. Investment activity in Canada's major multifamily rental markets showed impressive year-over-year improvement in 2024, driven by falling interest rates and a renewed appetite from investors. However, according to Avison Young's latest national multi-residential report, that momentum took a bit of a pause in the first quarter of 2025. This pause is primarily attributed to growing economic uncertainty, largely linked to volatile United States tariff policies. Marie-France Benoit, Principal and Director of Market Intelligence at Avison Young Canada, noted that there was a significant surge in investment activity when comparing the annual results for 2024 to 2023. Unfortunately, these high levels were not sustained in the first quarter of 2025, as investors became more cautious due to the higher economic risks associated with tariff volatility. Montreal led the country in investment volume during the first quarter of 2025, closely followed by Edmonton, which also saw one of the few increases in rent growth among Canadian cities. While transaction volumes fell, the average price per unit only saw a modest decline, stabilizing around $300,000, down from the 2023 peak of $422,000. Avison Young highlighted that this investor caution is a reflection of broader macroeconomic concerns, including the impact of tariffs on capital flows and the potential for higher yields as markets price in greater risk. Although inflation excluding shelter has stayed within the Bank of Canada's 1 to 3% target since May 2023, tariffs have been flagged by the Bank of Canada as a major threat to economic stability, influencing its policy stance and contributing to rising investor risk aversion in the real estate sector. Canada's rapid population growth, which peaked in the second quarter of 2024, has also started to slow down. Notably, net migration is declining, and the number of non-permanent residents, including students and temporary workers, has dropped for the first time since 2021. This signals a shift in federal immigration policy. Alberta, driven by interprovincial migration, especially from Ontario and British Columbia, saw the strongest population growth at 3.5%, while other provinces fell below 2%. Foreign investor activity in Canadian multifamily markets has also been receding. Sales volumes linked to foreign buyers have steadily decreased since their peaks in 2021 to 2022, with recent foreign purchases being sporadic. Despite the temporary slowdown in activity, purpose-built rental properties continue to attract investor interest. Avison Young describes the sector as a relatively safe haven, offering positive, stable cash flow from day one and presenting long-term upside potential for rental growth. Marie-France Benoit of Avison Young emphasized that with economic fluctuations, the multifamily sector remains a safe haven among investors, yielding positive, stable cash flows. Investors are particularly active on transactions under $20 million, where private capital and lenders are showing strong interest. The current interest rate environment also allows for favorable financing spreads, further supporting deal flow in this segment. Meanwhile, luxury rental housing is facing more pressure. Avison Young's cap rate survey indicates a steeper decline in fundamentals and sentiment for this segment. Elevated vacancies, declining rents, and affordability pressures from 2022 to 2024 have made higher-end units more vulnerable. More investors are avoiding this space in favor of recession-proof multifamily properties that offer more affordable rents and reduce the risk of tenant arrears or long-term vacancies. Alto Marketplace, a self-directed individual retirement account platform, is making waves in the alternative investment space by expanding its offerings. As of May 2025, Alto has added a new multifamily real estate investment trust, or REIT, to its platform. This move is particularly noteworthy as it targets the workforce housing sector, a crucial area amid today's economic uncertainties. The platform, which already connects its 30,000 investors to private equity, venture capital, and private credit opportunities, has teamed up with Ginkgo REIT. This partnership aims to offer accredited investors exposure to workforce housing developments in the Carolinas, a region seeing significant population and economic growth. Ginkgo REIT focuses on purchasing, upgrading, and managing high-quality, attainable communities. Their strategy is centered on long-term value creation and sustainability, making it an attractive option for those looking to diversify their retirement portfolios. Scott Harrigan, president of Alto, expressed enthusiasm about this new addition. He highlighted Ginkgo's disciplined approach in the workforce housing sector as a compelling diversification strategy for retirement portfolios. In today's uncertain economic climate, investments like these are increasingly vital. Bill Green, principal and co-chief executive officer of Ginkgo Residential, echoed this sentiment, sharing that the response from Alto investors has been positive, especially as Ginkgo continues its acquisition strategies. One of Ginkgo's recent acquisitions includes The Preserve at Pine Valley, a 219-unit garden-style apartment community in Wilmington, North Carolina. Acquired for $32.1 million in an all-cash joint venture with J.P. Morgan Real Estate Income Trust, this property aligns with Ginkgo's value-add strategy of enhancing workforce housing through thoughtful upgrades and operational improvements. Harrigan further emphasized the benefits of private market investments like Ginkgo's, noting that they may offer diversification, income potential, and meaningful community impact. With ongoing concerns around market volatility, real estate-backed opportunities, such as these, provide a resilient option for investors. Alto is proud to feature Ginkgo's offering on its marketplace, catering to the growing investor appetite for stable, real estate-backed opportunities. Now let's turn our attention to South Africa, where the multifamily property sector is shaping the future of the country's real estate market. According to a recent article by Given Majola, South Africa's large-scale residential rental property market, commonly known as multifamily, is rapidly emerging as a promising segment within the real estate sector. Amelia Dieperink, the head of commercial property finance at ABSA CIB, highlighted that this growth is driven by competitive financial returns and reduced volatility, all while addressing a critical housing shortage in the country. Multifamily properties are gaining momentum, largely due to the increasing demand for affordable, centrally located, and well-managed rental housing. Institutional investors are taking notice, as Statistics South Africa reports that 4.5 million households, or 23% of the national population, are currently renting. Of these, 15% reside in blocks of apartments, indicating a significant opportunity for growth within the multifamily sector. The model of institutional ownership and professional management of apartment buildings is fast becoming the global standard for urban housing delivery. According to the Center for Affordable Housing Finance in Africa's recent report, the sector is robust, resilient, and rewarding. Despite challenges such as service delivery and economic strain, developers remain committed to providing quality, well-managed housing with attractive amenities in desirable locations. The multifamily model has proven to be low risk and defensive in nature when managed by strong operators. It is adaptable and responsive, supported by innovation in property management and growing interest from local and international players. The residential property market is a major contributor to the South African economy, supporting growth, job creation, and meeting the evolving housing needs of a diversifying population. For the sector to reach its full potential, process and structural inefficiencies must be addressed and capital unlocked. Collaboration among institutional players, lenders, and policymakers is essential to accelerate delivery, scale developments, and enhance regulatory support. ABSA CIB has been instrumental in supporting multifamily developments, particularly within the affordable housing segment. Over the past decade, ABSA has focused on this high-growth area, providing financing solutions to investors and developers across South Africa. They've played a role in transforming urban centers like Johannesburg's Central Business District, where obsolete office buildings have been revitalized into thriving, community-based residential spaces. These developments stimulate economic activity, improve safety, and bring dignity back to neglected urban areas. ABSA has also embedded sustainability within property finance, having completed a significant transaction with the International Finance Corporation under the Market Accelerator for Green Construction. This funding was largely allocated to affordable housing projects, cementing ABSA's position at the intersection of environmental and social impact. Still, a pressing challenge remains the availability of comprehensive, reliable data specific to the multifamily rental market. ABSA has sponsored data compilation efforts and, alongside Diversity Urban Property Group, co-funded research studies to support the South African Multifamily Residential Rental Association. This emerging industry body represents major players who collectively own and operate over 75,000 units, representing 11% of the entire multifamily market. As investor sentiment shifts and appetite builds, the focus is now on scalability. With institutions like the Public Investment Corporation committing capital and financial institutions like ABSA providing finance, the imperative shifts to increasing the delivery of quality housing stock. Unlocking scale will facilitate a residential-focused listed real estate investment trust structure, offering the broader investment community a new vehicle for inclusive, impact-driven growth. South Africa's multifamily rental sector stands at a defining moment. With the right blend of capital, data, and policy support, it has the potential to reshape the country's housing market and drive broader economic and social transformation. Thank you for listening to the Multifamily Real Estate Insights Podcast. I'm your host, Sandy McKay. See you on the next one.